One of the lessons I want to leave with you is that this, hopefully as history has demonstrated, it's not a great model for behavior necessarily going forward. You should keep the interests of your clients uppermost in mind and behave ethically, which I ran into many ethical dilemmas in my time at Lehman. We conduct due diligence on our debt clients largely. I had worked for Standard & Poor's for the 5 years previous. Everyone in my group had worked for a rating agency previously, and this is the expertise that was valued. You know the rating agencies, you know how they work, how they think. We need someone like you to guide our clients through the process. Let's dress them up for the agencies, make them look as good as possible so we get that good rating that will help us sell the bonds to investors. So this involved due diligence, reporting to our commitment committee and other committees, as I said. And we had all kinds of very interesting clients. On the investment grade side, which is the largest and deepest market for bonds, we had names like ExxonMobil, Ford, again, household names. On the high yield side, smaller companies with a lot of debt, like the Italian Yellow Pages business, Pagine Gialle, Saga, etc. And we always had constant complaints from the high yield bankers coming in when the pricing on some of these was regarded as ridiculous. For this amount of risk, why are you delivering such low pricing? And a common retort was that, well, if we don't deliver that pricing to the client, RBS will undercut us, Royal Bank of Scotland. And we know what was going on there at RBS, right? Look at them today. If you're a UK taxpayer, you are a shareholder in RBS and likely to remain so, at least for the next 5 years. Fred Goodwin there was being very aggressive with clients on pricing and other matters, which brought that firm nearly tumbling down if the UK government had not stepped in. We dealt with a variety of corporates, sovereigns, financial institutions, very interesting, wide range of work, but very challenging too, because at S&P I was basically a corporate analyst, and when I joined Lehman, it's as if the bankers expected me to know everything about all these classes of the issuer, all their risk factors. And I was a relative beginner when it came to sovereigns or financial institutions, so there was a big learning process. But one thing I was clear about was that when it came to credit, I knew more than they did, which was key. There was an attempt to educate them, but the banker will try and do everything to get his deal done. He would say, this is my client in whom I am well pleased. It was like their client was God, you know. We would prepare the debt clients for market access, providing debt rating advisory, for instance. We talk to the agencies. Well, what do you regard as the issues here? You know, what can we tell our client? And make them look as good as possible in front of the agencies. And Lehman did a great job at that internally itself. Practically up until the time it declared bankruptcy, it still had a single A category rating from S&P and Moody's, which, you know, a firm that close to bankruptcy should not be rated that highly. That's an investment grade rating. So I think, as in many other ways, the agencies screwed up on that one. And then capital structure and financial advisory. So a banker is thinking about an acquisition for one of their clients that's rated single A at the moment. They would say, well, okay, if the client makes this acquisition and borrows a lot of money to do so, what might that do to its credit rating, and how can we manage that? And these are the kinds of scenarios that we were confronted with practically on a daily basis. It made your head spin at times. Some big deals that I was involved with at my time at Lehman Brothers in Europe. Telecom Italia, the Italian, it wasn't state-owned, but I think there was still, may have been a tiny golden share that the Italian government owned. It was this fat, lazy telecoms company, right, which wasn't doing much. It wasn't being very innovative. It was only just starting to discover things like the internet, for instance. You know, they're still tied to the gettoni that you put in the phone box, and that's how you make a call in Italy in the old days. It had very little debt. It had a lot of cash, so it was ripe for a takeover of some sort. And Carlo De Benedetti and his son, who were entrepreneurs, asked us, can we mount a successful takeover of Telecom Italia, a reverse buyout, if you will, which ultimately was successful, but key to this process was getting investment grade ratings for this baby, Telecom Italia, so that we could sell all these hundreds of millions of dollars worth of bonds in order to finance this buyout, right? Because it cost a chunk of change. We were successful. It was a great coup. We got a BBB rating, or even better, because, you know, it's a very cash flow, predictable industry. They had a virtual monopoly at that time. It was rather an easy call, actually, even though we had to convince J.P. Morgan and others, go to great lengths to convince them that this made sense. We couldn't do it all on our own. It was very successful. We earned over $100 million in fees, and hopefully contributed to making Telecom Italia more efficient, but certainly helped to make the Benedetti family a lot richer as well, and our bankers. And this one I particularly like. The government of Seychelles, this tiny tropical island republic in the Indian Ocean, right? They had borrowed too much money to drive education initiatives. They couldn't pay it back. They had defaulted on debt. They were seeking a restructuring. Someone had to go down there and conduct a due diligence for weeks at a time, and I volunteered for that hardship assignment. Very nice area, but very fragile economy based on tourism, which can be very volatile, right? A bomb goes off in a plane and everything's grounded and no one's going anywhere. And they had a tuna plant that we had acquired as well, because they were in the midst of tuna migration patterns. So that was the support for their economy. We did succeed in getting a sterling single B minus rating for the government of Seychelles from S&P, which they used to sell some more bonds, which again they ultimately defaulted on because they just couldn't sustain the kind of cash flows that they needed to support that. But that was a lot of fun. Arianta, the Irish Airports Authority, was involved in, and a bunch of household names here too in the UK, like Bace Express, Punch Taverns, Coral, betting business. These were high-yield deals that the bankers sought to get involved in. So those are some success stories, but then counterbalancing that, some not-so-successful stories, like doing a bond issue for the region of Yamal-Nenetsk in Russia, which bankers said, this is great. They have huge gas reserves, very strong economy. Well, they ended up defaulting on their debt, and we had a lot of unhappy investors. Similarly with Kirch Media, I don't know if any of you are familiar with that company or if they're still around, but again, our bankers thought that this was a great business, satellite TV in Germany, basically, in which they had a virtual monopoly. Despite having this monopoly, they were losing cash flow, hemorrhaging cash, hand over fist, year after year. And despite the fact with Morgan Stanley we put together a big financing, that caused a lot of problems too. This is one of the parables of the industry, I think, that you should bear in mind. That we had these big rainmakers among our bankers who would bring in lots of business, like Ruggero Magnoni. He was Mr. Europe as far as I was concerned. He knew practically everybody in the higher echelons of European society. He would bring in deals like this. And we reckon that over his tenure, he brought in something like 2 billion euros worth of business. Well, by the same token, over that time, he probably lost about the same amount of 2 billion euros through these lousy deals. Right? They get carried away with their enthusiasm. I can do no wrong. And it comes back to haunt them. And this is where we're trying to get away now from this compensation and bonus-driven culture in banks, that we need to think about the long-term consequences. What does the trader care if he executes a few lousy trades? As long as he makes his bonus, he's not going to be there in 5 years anyway when these things come back to haunt, right? Structured products, as we'll see. I enjoyed the travel aspect for the most part throughout Europe, various other places. That was great fun. Visiting the Lehman offices. They had offices everywhere around the world. Some of it was quite pressurized, right? Because you had to arrive and perform once you got there, but also seeing some interesting parts of the world. You were, however, on call 24/7. You know, a banker felt, given what you were being compensated, that they could call you at any time, in the middle of the night even. Weekends, sure, we had plenty of conference calls and meetings and pretty long work days as well. So there's a price to be paid, and particularly on the trading side. The minimum retirement age officially at Lehman for a banker was 55, and for a trader was 45. So that tells you something about their lifestyle and longevity.